we move from litigation to cooperation on aircraft, and that after almost 20 years of disputes.
With respect to China, we will continue to do business with them, and that is in our interest.
The UK will potentially get access to the CPTPP. This paves the way for that.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Wednesday, the 16th of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. President Joe Biden meets Vladimir Putin today in Geneva. He's expected to take a hard line on Nord Stream 2, arms control, and the recent spate of cyber attacks. Policy matters. Stocks hold steady ahead of today's decision of the Fed, while Jay Powell and company are expected to stand pat on rates, so tension turns to the dot plot. And China steps up its campaign to rein in commodity prices. State firms are ordered to curb overseas exposure, sending everything from iron ore to zinc lower. So good morning, everyone. President Joe Biden plans to warn Russian leader Vladimir Putin that the U.S. will respond to actions that conflict with its national interests when they meet face-to-face in a few hours' time in Geneva. My colleague Youssef Gamaeldin is on the ground for us in Geneva. Youssef, what exactly are the expectations for the meeting?
Well, Francine, basically the meeting is expected to take 4 to 5 hours, and it's going to take place in Villa-Lagrange, which is not far away from our vantage point. And arriving here overnight from Dubai, I could already see the power optics in play at the airport. American planes stacked, Russian planes stacked, and the 777 coming from DXB looking for a spot to park. But in terms of what we might get out of this, you think along the lines of 7 decades of U.S.-Russia summits. A lot of them have been important historic milestones. So what about this time around? Is it going to be anything like Gorbachev in the late 1980s with Reagan? Well, it doesn't look like it at the moment, but as you know, there's always a surprise factor with these one-to-one conversations. On the agenda on the U.S. side is going to be the ransomware attacks, some of the tensions over the Ukraine. You also have some of the domestic political issues in Russia. And then on the Russian side, it's really more about just trying to prevent it from getting worse, and maybe an agreement on cyberspace, potentially leading up to a reconciliation on the diplomatic side so that consular services can resume at least, maybe as one step to something more later in the year. Francine?
Youssef, thank you so much. Youssef Gamaeldin there in Geneva. Now, the meeting with Vladimir Putin is the last stop in what has been a busy week of international meetings for President Biden. It all started last Wednesday when the Bidens arrived in the UK for the G7 meeting. In Cornwall, the leaders of the world's major industrial nations pledged 1 billion COVID doses to poorer countries and urged China to respect human rights and fundamental freedoms. From there, Joe Biden traveled to Brussels for an EU meeting and a NATO summit. The U.S. president and the other leaders of the Western military alliance then placed China at the center of the agenda. Now, the final communique warned about the systemic challenges posed by Beijing and identified Russia as a main threat. Now, as we've discussed, Joe Biden now in Geneva to meet with his Russian counterpart. Joining us now is someone who's been traveling with the U.S. president since he left the States last week. He's Bloomberg's Washington, D.C. reporter, and he's Josh Wingrove. First of all, Josh, fantastic social media. I love following you, including some of the M&Ms that you posted from Air Force One. If you look at the, I guess, overarch theme of all these meetings, it's President Biden showing that he's back. What is his main message to President Putin going to be?
Well, they're really downplaying expectations. And good morning. It has been a long week. You'll forgive bags under my eyes, if you can see them here. But they're saying this is more about drawing lines in sand than it is coming with a particular deliverable out of there. We might see, for instance, that announcement about ambassadors returning. We're told that both ambassadors are here for this meeting, but otherwise, they're really sort of trying to really bring down expectations that there'll be some sort of tangible yardstick, 12 hours from now, whenever this ends, that they can take this to. The run of show, of course, is 1 o'clock is the start. Putin comes first. Putin is also going to give his press conference first. We have no idea how long that will be. Biden will go after that. We have no idea how long he will speak for. So this thing could drag on throughout the day. So I hope everyone is rested, energized, and waiting for this. They will speak briefly at the top of the first session, though. So that'll be our sort of sneak peek early this afternoon here in Geneva. We don't know what they'll say. We don't know if they'll respond to questions. but that's the closest thing they're going to have, given no joint press conference.
Yeah, Josh, I remember actually I was in Helsinki, which was very different in terms of pageantry when President Trump met with President Putin, and they, at the time, did a joint press conference. What would constitute a win for President Biden? It was a memorable one. So, what does the U.S. need from Russia today, even if we don't have any policy agreements?
I mean, I think the U.S. is just hoping for things not to deteriorate further in the relationship. I think that Joe Biden has warned Russia over recent cyber attacks, but also, going back to the SolarWinds situation. They've kind of stopped short of blaming Russia for the ransomware incidences we've seen lately, but they've said these are happening in Russia's backyard. In effect, they're harboring the criminals doing it, and they need to do more to stop it. And if they don't, the U.S. may respond. So we really haven't seen those sort of specific threats, like what they will do to respond. So I think we'll kind of watch on that. Biden teed up this meeting, of course, by meeting with Baltic countries, by speaking by phone with Ukraine's leader as well. Like he's meeting with NATO, of course, and so he's trying to sort of, I guess, show a united front, but they're not under any illusions that Putin is a pushover or anything like that. So I don't want to hold my breath too much for a huge outcome
Josh,
here. I think this is more for them about framing and setting the relationship.
Josh, the two leaders know each other, but it's the first time they meet as president, or as the President Biden is in charge. Do we know if they get along? Have they had a kind of an okay relationship in the past?
That's a good question. I wouldn't say get along. Joe Biden, though, has a habit of trying to get along with everyone. Putin, in his past meetings with presidents, has a bit of a charm factor to him. Bush, Clinton came out sort of a little effusive almost in their sort of characterization of Putin as a person. Biden is, I think, going in with a bit of a tougher edge on this, but he's one that is trying to bring bipartisanship back to Washington, which is a city that doesn't have a lot of that going around right now, and so I think he will try to be respectful, but he's not there to be friends, is what officials are saying. They're not trying to sort of have a warm, bubbly type of greeting relationship that they've had at the G7. Instead, this is really more for them about putting up some fences, if you will.
Josh, thanks so much. Bloomberg's DC reporter Josh Wingrove in Geneva. We'll have plenty more from Josh throughout the day, and I urge everyone to follow him also on social media. Now, coming up, keep watching the dots. It's the outlook that's in focus ahead of today's Fed decision. We'll talk taper expectations with Grace Peters. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's check on the markets because it's a Fed day, and also it's a very big Fed day, one of the most possibly watched Fed days in recent memory. This is because of market positioning, and of course, a lot of people will at first glance look at the dot plot and then look at what Jay Powell has to say about some concerns going forward. I know that the position in the market means that it could actually reprice quite quickly. Investors really turning they're cautious ahead of this policy decision amid speculation that officials could give an indication about their timetable for tapering stimulus injections that have driven this market boom. So let's talk about the market boom. Let's talk about what we're seeing also from the Fed and what the dot plots could show us. Joining us now is Grace Peters at JP Morgan Private Bank EMEA Head of Investment Strategy. Grace, thank you so much for joining us on a really big day. Is this possibly the most important Fed decision for Jay Powell's career?
Indeed. I mean, there's so much hype around this because we're at the point where we're thinking about tapering, we're thinking about liftoff, which obviously speaks to the dot plot that you referenced, and you know, on top of that, indicators around how the Fed's thinking about core PCE and also unemployment. So the things that we're going to be watching for specifically around tapering, we think that the Fed could introduce tapering, have a conversation around tapering, but we think that they're going to fall short of laying out a framework when it comes to exact timing and quantities when it comes to tapering those $120 billion of monthly asset purchases they're currently making. But certainly introducing it to the narrative, I think is the first step. When it comes to the dot plot, obviously we're looking for, you know, the private bank view is that the liftoff, the first Fed hike, is going to take place in the second half of 2023. At the moment, the Fed is sitting more in 2024 when it comes to the median dot plot. But we're expecting, and I think it's quite a high chance that actually that comes forward, pushing liftoff into 2023. And that in itself would then act as a catalyst for bond yields to move higher. We've obviously seen some consolidation when it comes to US 10-year Treasury yields around the 1.5%, down from where they were in March. But if we do get this talk about tapering, and if we get you know, this move up when it comes to the dot plots, we think you're going to see Treasury yields start to rise again. And indeed, over the next 9 to 12 months, we think you're going to be headed to around 2% on 10s, perhaps 2.25 as well, which obviously has implication for leadership in other asset classes like equities.
So, Grace, how quickly could we see a scaling back of bond purchases, or at least talking about it? Could this come as soon as, you know, this year, or do you expect in 2022?
Yeah, I think the first step is obviously is talking about the fact that tapering is on the horizon. When it comes to actually when we think those purchases are going to be started and start tapering down, we think that's early 2022 when the process starts, and that process is likely to take about a year. During that time, you're likely to see inflation start to modestly tick up. We think inflation this cycle will be slightly higher than the last cycle, where obviously we didn't achieve the Fed's mandate of 2% inflation on a sustained basis, which is why when it comes to Fed liftoff, after you've done you know, the tapering of the asset purchases, after inflation has consistently averaged above 2%, which we think is a 2023 event, you then get at the back end of 2023 the first Fed rate hike coming through.
Grace, what exactly is priced in the market right now? So there's an expectation, you say, you know, there's an expectation that dot plots probably move to the second half of 2023. There is, I guess, you know, an expectation in the market that it will certainly be in 2023, although the precise time is not there. What's priced in?
Yeah, I think at the moment, and we write about this a lot in our mid-year outlook that's just been published, you're at the crossroads where the world is shifting, particularly the developed world is shifting from early to mid-cycle. With that, you get growth fading in the second half of the year, and we've seen that coming through in the last month or so, some more patchy economic data, which is totally normal as you undergo this transition, and you get the pivot from central banks towards less supportive monetary policy. And I think that's why you've seen assets like US equities stalling over the last month or so as these things are digested, and the concept of peak data gets priced into markets in both equities and bonds. From here, I think where the market is going to get a lot more comfortable is about growth, not just through the end of this year, but through the end of 2022 into 2023, still being above trend. And indeed, when you look at nascent themes around CapEx spending, around digitization, automation, there's every chance that growth from 2023 onwards, i.e. potential growth this cycle, is stronger than it was in the last cycle. And I don't think that's priced in. So as we, you know, our view at the private bank that this is how the growth picture could play out in the medium term, as that becomes priced into markets, there's upside to rates, there's upside to equities. And from a portfolio perspective, what we think it means is you need assets exposed, pro-cyclical assets exposed to benefit from that, but also married with secular growers that transcend business cycles.
Grace, what do you do with commodities right now? So we also had the story about, Chinese authorities trying to curb some of the raw material price increases that we've seen and try to ease that. Is this maybe the biggest concern away from interest rates and central banks in the market?
Well, commodities, actually, if we think about that barbell approach through this cycle of wanting to own assets that are pro-cyclical beneficiaries of above-trend growth and reflation, commodities fit into that. So we have quite an optimistic view of commodities, specifically oil, which is more of a pro-cyclical trade, but also copper, because when we think about the other side of that barbell, the long-term growth potential, the secular growers, copper is also a beneficiary, not just of the cyclical rebound, but also, it's employed a lot more when we think about electric vehicles, as well as the construction cycle. So we think that there is a space for commodities in the portfolio, both on the pro-cyclical side, but also more structurally as we go through the cycle and think about those long-term winners.
Grace, thanks so much. Grace Peters, our JP Morgan Private Bank EMEA Head of Investment Strategy. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. In the US, the two largest states are now fully reopened. New York Governor Andrew Cuomo has lifted the state's pandemic mandates, saying 70% of the adult population has been given at least one dose of a COVID vaccine. And California has lifted capacity limits, social distancing, and removed most mask mandates for vaccinated people. The governor, Gavin Newsom, is marking the full reopening with a lottery awarding 10 vaccinated residents $1.5 million each. Now, MACKENZIE Scott is giving away another $2.7 billion to a variety of charities, bringing her giving so far to $8.5 billion. Scott, who holds a 4% stake in Amazon following her divorce from Jeff Bezos, wrote in a blog post that she is shedding a fortune that was enabled by systems in need of change. She added that it would be better if disproportionate wealth were not concentrated in a small number of hands. And Israel has launched airstrikes on Gaza, saying it acted in response to incendiary balloons sent across the border from the Hamas-controlled territory. The violence comes just 2 days after Naftali Bennett took office as Israel's prime minister, ending Benjamin Netanyahu's 12 years in power. Last month, the conflict killed at least 243 people in Gaza and 12 in Israel. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, Citi joins JP Morgan in warning on a hit to trading revenue. More on that banking story next with our Danny Berger. This is Bloomberg.
Investment banking revenues are likely to be down in the low to mid single digit range. We do see strong M&A performance, and we do feel good about the pipeline and the dialogue that we're having in investment banking.
Well, that was Mark Mason, Citigroup's CFO, on the slowdown in pandemic trading. Now let's get to the very latest from Danny Berger. Danny, thank you so much for joining us on this huge story. So this isn't the first warning that we've had this week from banks.
No, it's not. I mean, just yesterday, we heard from Jamie Dimon saying that he sees about a 38% slowdown in this current quarter in trading revenues compared to the one before. Morgan Stanley also had a warning earlier this weekend. And really, these companies in their last earnings results said, hey, this really high volatility in markets that's giving us this big trading revenue isn't likely to continue. So it's not a surprise. These are the first concrete numbers we're getting. So we're seeing some price adjustments due to that. But really, one of the big concerns is this is a double whammy. While you have the trading picture return to normal, what's not returning to normal is loan growth. This is something that Citi and JP Morgan also warned about, that still the effects of the stimulus, these high cash piles mean that consumers aren't taking out a lot of loans, and neither are corporations. So it's both trading and loan revenue that's likely to look weak for banks this quarter.
Danny, another blow to trading revenue. The EU is also barring 10 banks from their bond sales. Why, and how much will this hurt?
Right, so these 10 banks, this is out of about 29 that are responsible for bidding on these EU bonds. The EU has said to these banks, which are really a who's who from JP Morgan, Bank of America, Citi, NatWest, Barclays, Nomura, and more, EU is saying to them, look, you've had past transgressions of breaking antitrust rules, and we want evidence from you that you've done enough to fix these issues. And until then, you cannot participate in this huge offering that the EU is putting out, part of the European Bond Recovery Fund, about 800 billion euros. This isn't likely to make or break these years. In total, this is a pretty small percentage of trading revenue for these banks. But just in terms of European issuance, this is about 10% of revenue for these banks. So, you know, it could snowball if they can't get included again in these bond offerings, Francine.
Danny, thanks so much. Our Danny Berger there with the very latest on the banks. Now, coming up, Biden and Putin meet today. On the agenda for this highly anticipated summit: climate change, cyber attacks, and arms control. Of course, up next, we'll be back live in Geneva. And then we also look at UK inflation surging to 2.1%. This is more than the BOE expected, so we'll see what it means for sterling. This is Bloomberg. President Joe Biden meets Vladimir Putin today in Geneva. He's expected to take a hard line on Nord Stream 2, arms control, and the recent spate of cyber attacks. Now, policy matters. Stocks hold steady ahead of today's Fed decision. Jay Powell and company are expected to stand pat on rates, so attention turns to the dot plot. And China steps up its campaign to rein in commodity prices. State firms are ordered to curb overseas exposure, sending everything from iron to zinc lower. Good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition on this Wednesday, the 16th of June. Now, we're just getting some breaking news on the ECB. This is a very nice Bloomberg scoop from, of course, our team over in Frankfurt covering the ECB. Now, this has to do with banks. So let's see if there's an impact on banks. We understand that the ECB is poised to extend the bank capital relief by 9 months. So what this means is that basically they want to ensure that lenders keep supplying credit to the economy. This is according to people familiar with the matter that have been speaking to Bloomberg. Now, the ECB's supervisory board plans to allow lenders continue to exclude deposits held at central banks when calculating their leverage ratio until March next year. The measure still needs approval from the ECB's governing council to take effect, according to these people, but it is having a bit of an impact, tiny bit of an impact, actually, on some of these banks. On to our other big story, and President Joe Biden plans to warn Russian leader Vladimir Putin that the U.S. will respond to actions that conflict with its national interests when they meet face-to-face in a few hours' time in Geneva. Now, in recent months, both presidents have spoken about relations between the two countries, and here are some of the highlights.
The United States is not looking to kick off a cycle of escalation and conflict with Russia.
It's not us who brought Russia-U.S. relations to the present conditions.
If Russia continues to interfere with our democracy, I'm prepared to take further actions to respond.
We don't have disagreements with the United States. They have the only disagreement. They want to withhold our development.
We want a stable, predictable relationship.
Why the American partners have done what they have until now is a mystery to us.
But I responded directly and proportionally to Russia's interference in our elections and the cyber attacks on our government and our business.
The United States and Russia have some corresponding interests.
But we can also cooperate when it's our mutual interest.
I do hope that our meeting will be constructive.
Youssef Gama-Eldin is now on the ground for us in Geneva. So, Youssef, what exactly is the latest?
Well, Francine, we're just moments away then from the beginning of the highly anticipated meeting between Biden and Putin. And if there's any indicator on the level of tension as we go into these rooms and discussions, it's not just what you just played out in terms of highlights of comments in the run-up, but it's the very fact that on a beautiful day like this on Lake Geneva, they're not willing to share a meal. They're not going to have breakfast. They're not going to have lunch. and they're not going to have dinner. So not only are the press conferences going to be separate, but also the meetings throughout the day. Both teams are highly visible in terms of the supportive functions that are going to try and set the scene before the actual meeting between Mr. Biden and Mr. Putin. But at the moment, Geneva very quiet as we count down to that moment.
So the two heads of state actually know each other, but this was, this is the first time that they meet since Biden became president. Do we know that if they get along? Do we know if in the past they've had, very stark differences?
Well, the animosity between the two is no secret. And the last time they met is actually a long time ago, 10 years ago, in a very different world geopolitically. And they were doing different things. Well, a little bit different, let me put it that way. So Putin was the prime minister at the time of Russia, and Biden was the vice president of the United States. But in the run-up to this, then, quite a few barbs that are being exchanged. Is this going to be a remake of the kind of meeting that we had in the early 60s between Khrushchev and Kennedy? No. They both bring a lot of foreign policy experience to the table, and both of them want to come out as winners. But to the delight, perhaps, of a world watching in anticipation, probably can only be one at the end of the day. Francine?
So how is Biden's meeting with Putin being perceived in the U.S.?
Quite a bit of criticism coming through from U.S. policymakers, specifically the Republican side, of course. They're looking to score points on this. They're saying that Biden shouldn't be focusing on issues abroad. The real priority should be the challenges back home, a U.S. economy that's just beginning to recover from the COVID-19 impact, the problems at the border with Mexico. And so any potential mishaps are going to be easy meat, as it were, for domestic political consumption in the United States. Francine.
Yusuf, thanks so much, Yusuf Gama-Eldin there for us in Geneva. Now joining us to talk about all of this is Oksana Antonenko, Director for Global Risk Analysis at Control Risks Groups. Now she advises governments and companies about political risks in Europe and Russia. Oksana, thank you so much for joining us today. I don't know what a good outcome for today would be for President Biden. What does he need from Putin today?
Well, indeed, the expectations are extremely low from this meeting in terms of concrete deliverables. But I think the key question now, whether this meeting and kind of personal relationship between the two leaders, however confrontational it might have been in the past, can stop what is seen as a dangerous spiral of escalation in tensions between the two countries and move them towards a more predictability and stability. This is the aim that President Biden has declared for this meeting, to move this relationship towards more predictable and stable footing. And of course, for President Biden, the most important task is to make this relationship more predictable because he wants to focus on other foreign policy challenges, most importantly, China. And of course, for President Putin, the important outcome is the meeting itself. The fact that he's sitting down with President Biden, very first time that Biden is going on his foreign trip, and that the attention of the whole world and the foreign media and international communities is focused on him after being a pariah for some time and being really seen as someone who was a challenge to the global international order.
But Oksana, how are things different now with President Biden compared to President, Trump? I remember being in Helsinki in 2008, and it was very different. Does this change actually with the new administration? Will Vladimir Putin change the way he conducts, at the margin, maybe foreign policy?
Well, indeed, the chemistry between the two leaders, between Trump and Putin, have been very different from the chemistry between Putin and Biden. But on the practical side, actually, during the Biden presidency, there has not been many breakthroughs in the relationship between Russia and the United States. The United States has introduced a number of sanctions on Russia, and there has not really been any breakthrough either on arms control or on cyber, on any other big ticket items that President Putin was hoping that he will be able to strike a deal with President Trump. With Biden, on the other hand, I think there is a great appreciation on both sides that the relations have deteriorated to the point that they simply cannot allow that deterioration to continue. We are at a very dangerous state that there is almost an entire collapse of the arms control framework. So the two countries still hold the 90% of the global nuclear weapons. So they need to agree how to manage those stockpiles and to reduce them going forward. And of course, there are are tensions in the regions, in Afghanistan, in Syria, of course, over Ukraine. So there's a number of potential points where the relationship can quickly spiral out of control. And they need to install the guardrails to prevent the deterioration from happening. And I think Biden is in a better position to act and install those guardrails, entering this relationship from a more realpolitik point of view.
But Oksana, how difficult is it to put political pressure, especially with allies such as Europe, when Nord Stream 2 is almost finished, and so you have commercial interests?
No, absolutely. I mean, President Biden, of course, was very clear about the fact that he is prepared to impose a very high economic cost on Russia should Russia cross the red lines that President Biden has clearly outlined, most importantly, of course, in Ukraine, but also, in terms of interference in the U.S. internal political affairs, fermenting polarization, and, of course, cyber attacks. However, we also see that it is not very easy for President Biden to really secure this transatlantic agreement on those punishing economic sanctions. And Nord Stream 2 is a very good example of that. The United States had to back down from its pressure on Nord Stream 2 because they didn't want to really undermine the relationship with Germany and other European allies who opposed the United States actions in that space. So I think we, of course, have now more flexibility on the US side to impose sanctions quickly on Russia. But at the same time, they're also mindful to keep this transatlantic relationship and consensus on Russia together in order to really appear to be much more powerful when they confront challenges from Russia and from President Putin.
Oksana, thanks so much. Oksana Antonenko, their Director for Global Risk Analysis at Control Risks Group. Now, coming up, metals in the red. China orders state firms to curb overseas commodities exposure. That's as the government steps up its campaign to control raw material prices. We'll get more on that next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Blackstone is nearing an agreement to acquire SOHO China in what would be the biggest real estate investment in Asia's largest economy. That is according to people familiar with the matter. The private equity firm could announce a $3 billion deal as soon as this week. Now, American Express plans to have most US and UK employees work in the office Tuesday through to Thursday with a permanent work from home option for Mondays and Fridays. The firm will invite more staff back on the 13th of September with plans to fully adopt a new schedule the week of October the 4th. And for all of us who love fashion, Google has won a deal to provide a French luxury giant LVMH with cloud-based AI solutions. This is to personalize experience for its customers and foster long-term growth. The pandemic has accelerated the switch to online shopping as consumers become used to buying high-end price products without seeing them in store. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, China is stepping up its campaign to control soaring raw material prices. The country's regulator is ordering state firms to control risk and limit exposure to overseas commodities markets. Well, in a second development, Beijing will also release state stockpiles of metals, including copper, aluminium, and zinc. The metals will be sold in batches to fabricators and manufacturers. Well, joining us now is Phoenix Kalen, Societe Generale, Head of Emerging Markets Research. And Phoenix, I know you also have your mid-quarter outlook, which we'll get to in a second. So thank you so much for joining us on such a busy day. Phoenix, when you look at what China is doing with commodity prices, should the world sit up and take notice? And what does it mean for China, but also commodities in general?
Yeah, I think there is certainly going to be a downward trend in commodity prices over the coming quarters. And it's not just because of excess supply, but also because of the concerns around how fast commodity prices have surged. They've surged over 50% since the low that we touched in the spring of last year. So it's a huge push into inflation dynamics. It's destabilizing. And I think it's kind of reasonable to expect for a country like China to kind of curb these inflation increases. And I think in terms of excess supplies as well, that those are some of the other factors that might drive commodity prices lower. So our commodities team is expecting, for example, for oil prices to go down toward 62 per barrel by the end of the year, and also for a 25% drop in copper prices from the top.
So, Phoenix, I know in your mid-year outlook, for example, you look at China, and I think you're overweight China. How do you take advantage of the economy growing in the country?
Yeah, so on the bond side, we're certainly overweight China. We're also overweight China on the equity side. I think, the path that the country has laid out in terms of a very long-term plan, very careful measures around trying to delever certain segments of the economy because that was overheating, and trying to drive the economy quite carefully. I think this is supportive, and it's going to be a stabilizing factor on the capital outflows and inflow situation. So I think, over the medium term, we might see a bit more of measures around the currency to try to curb excessive CNY appreciation, and try to limit the possibility of too much inflows into the economy. That might be stabilizing, especially when we do have external shocks. So I think that the growth picture is still quite benign. We're still expecting to see strong underlying momentum, especially as the economy emerges from various COVID restrictions. We're seeing some of the numbers, the headline numbers, taper down, but just because of some of the base effects. But overall, it's still pointing to a quite resilient economy.
Phoenix, I know also in your mid-year outlook, you basically say dispersion is unleashed. So what does that mean concretely for investors?
Yeah, so I think we are going to see quite a significant variation of returns across EM assets, across regions, and even across individual countries within regions. So in terms of more granular analysis, for currencies, we would be overweight CEMEA. We would stay neutral in most Asian markets. We're underweight in LATAM. In terms of local bonds, we would emphasize places like South Africa and China as our key overweights, and be underweight in LATAM markets, or overweight on the sovereign credit side.
Is there anything, Phoenix, that you used to be bullish on that now you're a little bit more cautious? I'm thinking maybe of some of the countries that have been particularly badly hit by some of the COVID variants.
Well, I mean, I used to be super bullish on Turkey, but no longer anymore. But that's, I guess, less because of the COVID situation. That's still, of course, going to be a drag on economic growth over the coming quarters. But still, that's, I think, more because of the central bank credibility around how that interplay works with the political interference. In other places, we used to be much more bullish on Russia. We are no longer anymore. We are currently recommending short Russian assets versus South African assets, for instance. So we've got a long ZAR ruble trade on. So I think those are some of the places where we've certainly pulled back on our risk taking in favor of other places like frontier markets. So we're now overweight both fixed income and currency exposures in Egypt, in Ghana, in Kenya.
Phoenix, when you look at the G7, when you look at what happened at NATO, and today President Biden meeting with President Putin, does that actually change anything for your investor view, or is it because it's longer term? Some of, for example, the trade wars that we could see or foreign policy changes, the timeline doesn't just match up with what you're trying to do in emerging markets?
I don't think it really has a huge market-moving immediate impact on EM in terms of the G7 or even the Putin-Biden summit. I think it's more about the messaging that certain players are trying to come across in terms of like drawing red lines or establishing what our boundaries are for the U.S. side. So I don't think it's going to be a major mover. I think the underlying tensions are still going to be there, especially between Russia and U.S. But for the G7, of course, they're going to kind of reaffirm those democratic values and try to work together on some of the longer term projects, but no immediate market impact in my mind.
Phoenix, thank you so much. Phoenix Kalen, their Societe Generale, head of emerging markets research. Now, coming up, China steps up its campaign to control commodity prices. The country will soon release metals from secretive state reserves. So we'll continue that discussion next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now, as China looks to rein in rising commodity prices, Bitcoin rises above $40,000 again, and we wait for today's Fed decision. Now, let's take a look at today's stock market. Of course, all of the positioning is ahead of the Fed. I heard a big investor actually calling it the single most important Fed decision in Jay Powell's career. I'm sure you'll have many more career-changing Fed decisions, but this is the one today. If you look at the markets, look, it's very clear that investors are marking time before the decision, as there are more and more concerns that officials could pencil in a timetable for tapering stimulus injections that have driven a market boom. If you look at European stocks, are pretty much unchanged, and you can see the U.S. 10-year-old 149.22. Joining us now is Eddie van der Walt, Bloomberg M.LIFTS strategist. Eddie, so we look at the Fed, but what is China's ability to move commodity prices lower?
Yeah, there's a lot of eyes on China at the moment. And in the run-up to the Fed, we can see that already with, copper prices coming down today. And yesterday, I think yesterday losing something like 3% on the day. China would like to see lower commodity prices. There's no doubt about that. And as the biggest buyer in the market, they have some pricing power. But they are the buyer, they are not the producer, and therefore they have limited power. We spoke to Citi earlier, and they told us that China has something like perhaps 2 million tons of copper in reserve. Global copper demand is about 24 million tons a year. So China can supply the market for a while and keep a lid on prices, but they can't do so forever.
What are you expecting from the Fed today? How much of, if we see a move in dot plot, which we could see quite easily to, some kind of tapering in 2023, how much of it is already priced in?
I actually could agree with that earlier comment of yours that said, that this is one of the most important Fed decisions. Not because we're expecting any particular action, but because if we look back at 2013, we saw that the real market action came immediately after the tapering talk started coming into the market. And if we start to see that, if we start to see hints of the, from the Fed that they're not going to keep monetary policy loose forever, and tapering talk has been, just creeping into the market. So if we see a little bit more of that from the Fed, I think that will be really interesting. But therefore, all of the action will come after the decision, probably, during the statement.
Eddie, what do you make of, we had this inflation print in the UK, CPI, above expectations and above what the Bank of England, I think, was also expecting. Do we look through it, or is it something that we should, that will reprice expectations for what the Bank of England will do?
Gosh, that transitory narrative is just getting a little bit tarnished, isn't it? Everybody says that inflation is going to be short-term, and the Fed and central banks in general would like us to believe that. But at the same time, you are seeing commodity prices, still extremely high. Copper still sitting near the, $9,500 a ton level. We're seeing inflation in the UK. We're seeing wage prices, levels increasing. So it's just difficult to make the case at the moment that it really is transitory. And therefore, I think the Fed is very much a live meeting, if not from a decision point of view.
Eddie, thank you so much. Eddie van der Walt, they're a Bloomberg M.LIFTS strategist, full, of course, of wisdom, also our best crypto watcher. So we'll have plenty more from Eddie throughout the day. Now, Bloomberg Surveillance early edition continues in the next hour. Matt Miller joins me out of Berlin. Kailey Leinz will be in New York. We have the Fed. We, of course, have also President Putin meeting with President Biden over in Geneva. So we have a full roundup of that, and then the China commodity story as well. This is Bloomberg.
What is the Fed going to do, and how does that play into everything else? It has been a Fed-driven market. All this liquidity has definitely been pushing people out of fixed income.
We're surprised by where break-evens are and where treasuries are at right now, and we do think that this is a point where U.S. Treasury yields are set to rise in the next couple of weeks and months.
There are lots of reasons to be still a bit more cautious, and we think that central bankers are actually being quite smart about not being too aggressive at choking off this recovery, because it is still very early days.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
Hi, everyone. It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, June the 16th. Our top stories today. The Fed looks to the future. Jay Powell and his colleagues may move up a discussion on scaling back stimulus and raising interest rates as soon as 2023. Showdown in Switzerland. Officials keep expectations low as Joe Biden meets with Vladimir Putin. And China tries to cap commodities. Beijing's concerned that soaring raw material costs threatened the recovery. Well, there's quite a lot going on today between the politics, the foreign policy, and of course the Fed. Kailey, it's one of the biggest Fed days in recent memory. We heard from one big investor actually saying this could make or break Jay Powell's career.
Yeah, to say that investors are focused on the Fed and probably the Fed only today probably isn't that much of an over-exaggeration, Francine. As far as where that left us in the Asian markets, it was a mostly lower session. The one exception was the Kospi in South Korea, which did end the day higher by about 0.6%. The Hang Seng, the Nikkei were both lower, though, and the underperformance came from Chinese equities, with the CSI 300 down about 1.7%. Now, part of that may have to do with the economic data, retail sales, industrial production, both coming up short of expectations. But then there is also the fact that China is increasing its crackdown on commodities. That meant materials were the big drag within that index, that sector down about 3%. Of course, China has asked state-backed firms to curb their overseas commodity exposure. Plus, China is going to release state reserves of metals, which could bring more supply back onto the market. As a result, we saw iron ore futures in Singapore down the better part of 3%. As for what the picture looks like here in the U.S., we really are just in a holding pattern ahead of that Fed decision. We fell from record highs yesterday, and we are ticking just a touch lower this morning, only down about 1 point on S&P E-minis. It is steady as she goes in the Treasury market as we wait that Fed decision. Right now, we're sitting just around 1.49% on the U.S. 10-year yield. It is a weaker dollar story today, and I would note that in the commodity complex, metals may be under pressure. Crude is off session highs, but it is still higher. We're above $72 a barrel on WTI. Matt, what is the picture looking like over there in Berlin?
I have to say, also on Brent crude, we're seeing gains, Kailey. So across the oil complex, and I think $74.73 was the high for Brent today. So those prices are really pushing higher. And that could be one of the things that's weighing on European equity indexes. Take a look at what's going on here. Really not a lot of movement in the overall Stock 600 benchmark. Here you see some green on the screen, some red on the screen. France is up, Germany is down, Spain is little changed. But really not a lot of move from the center. The interesting thing is to look at the yields. We're seeing yields on bonds come back down again. You can see now negative 24 basis points. And I threw Volkswagen and Daimler shares in there because there have been a couple of reports out from DPA that are really interesting on those two car makers. Volkswagen closing down its Wolfsburg plants. That's obviously the heart of VW here in Germany. Because of the chip shortage. And Daimler has put its workers in Bremen and Rastatt factories back on state-backed pay schemes that they need when they're not working, also because of the chip shortage. So the chip shortage is still hitting hard in terms of automobile production. Plus, you have those higher petrol costs, which, to be honest, they don't make much of a difference for European drivers since we already pay like $7,000 per gallon for gasoline. But they maybe on the margin, they change a little bit, Francine.
Matt, I love the way you slipped that in there. Like, France is up, Germany is down, but we're not talking about the football, right? That's forgotten. I'll tease you in the break.
You know that I
football that we saw yesterday.
Don't know what happened with the football, and I definitely didn't watch.
France won. France won. And we also have another story. The ECB also poised to extend some of the bank capital relief by 9 months. So watch out for that. Now, a look at what else is going on today. Of course, U.S. President Joe Biden and the Russian President Vladimir Putin hold a summit in Geneva today. It's their first in-person meeting since Biden took office. We'll get economic data from the U.S., including housing starts and building permits. That's at 8:30 a.m. New York time. 10:30 a.m. the EIA releases its crude oil inventory report. And the big one, the Federal Reserve publishes its latest rate decision at 2 p.m. today, followed by a press conference with the Fed Chair Jay Powell. And certainly we've heard a couple of market movements ahead of it. So in foreign policy, though, the meeting to watch is between Joe Biden and the Russian President Vladimir Putin. It takes place in Geneva. Now, both sides have kept expectations low for a breakthrough in relations after a period of rising tensions. Bloomberg anchor Yousef Gameldine is live on the scene in Geneva. So, Yousef, we're not expecting any policy announcements. So what is this summit about?
Well, Francine, we're just under a couple of hours away from the big meeting. It is a gorgeous but very hot day, and in many ways that could symbolize what is likely to happen over the course of this afternoon as these two giants go into the ring and meet. They're coming to the table with very different lists in terms of issues that they want to talk about for the United States. This is about human rights, it's about geopolitics, including the Ukraine, for example, and it is about the ransomware attacks. On the Russian side, it is really about trying to prevent the relationship from deteriorating further. Maybe you get something on cybersecurity. The people we've spoken to say that you're not going to get the kind of nuclear breakthrough you got in 1985 with Gorbachev and Reagan. What could happen, though, is maybe a step forward on the diplomatic side so that you resume consular services that allows a little bit the movement of goods and people. It's good for business and it's good for investors. But they're not going to be sharing any meals over the next 24 hours, neither breakfast, lunch, or dinner. Francine.
All right, Bloomberg's Yousef Gamaldin, thank you so much. And of course, Bloomberg White House correspondent Josh Wingrove has been traveling with the president throughout his European tour, and he joins us now also from Geneva. Josh, just how high are the stakes for President Biden today?
I think they are acknowledging that the stakes are high, but they're really trying to keep the expectations low. This is about setting guardrails, if you will, on the U.S. side. They are talking about certain subjects that they believe, have to be on the table for discussion. In other words, they haven't agreed to not discuss human rights. Biden has telegraphed that he'll raise the fate of Alexei Navalny, which he has been raising public pressure on to begin with. As Yousef mentioned, cybercrime will be a big one, but both countries really downplaying expectations of some sort of tangible breakout of this. We might see ambassadors return to the countries as a sort of, good faith first step type effort. But, Joe Biden has been raising his sort of warnings, if you will, rhetoric, I'm sure Putin would call it, around the rising, tide of what he calls autocrats against democracies. Putin, of course, atop the list or near the top of the list in Joe Biden's eyes. And so I think he is going in there to sort of lay down some lines in the sand. The big question is if and when Putin crosses those lines, what will Joe Biden do? That's something they've been silent on so far.
Yeah, that's my question as well, Josh. What can he do? Are there any levers that Biden can pull? He has a bark for sure, but can he really bite when Putin is very powerful? He seems to be able to do whatever he wants. The European neighbors to Russia are, not only happy to do really big commerce with him, but dependent on Russia for his product. So what can Biden do to get the upper hand here?
I mean, his power is limited, and, you don't have to look any farther than the Nord Stream pipeline to see, Biden didn't want that pipeline built. Putin obviously does, Merkel does, and Biden essentially has thrown in the towel, realizing that there's not much the U.S. can do to stop it. I think that's true in other spheres. U.S. officials would point to examples like the SolarWinds case, where they had what they called a proportional response. That's the sort of message that they're doing here. We've looked at the ransomware cases we've seen recently. This is one where we're saying, hey, what can the U.S. do? What will the U.S. do? They've said Russia, Putin are not directly responsible, but are harboring the people that are. One question that they have not bitten on so far is, are there retaliatory type, digital attacks that you are considering doing against these sort of non-state criminal actors? And they've bitten their lip or tongue on that one. So, I think the firing back, if you will, would be more in the shadows than the public eye. But you're right. Biden only has so much he can do when on certain files when it comes to this.
All right, Bloomberg White House correspondent Josh Wingrove covering the summit all day for us in Geneva. Thank you so much. Meanwhile, China is stepping up its campaign to rein in soaring commodity prices by ordering state firms to limit overseas exposure. Beijing will also release state stockpiles of metals. Bloomberg Chief Asia Economics correspondent Enda Curran joins us now with more from Hong Kong. And just how significant are these moves?
Well, it's a dual-pronged move now. The government is putting some action behind their recent rhetoric to try and talk down the market. On the one hand, they're telling state-owned enterprises you have to limit your exposure to overseas commodities markets, and they're asking them to report their futures positions according to our colleagues reporting this. And then on the other side, the government and the authorities will release their stockpiles of these key metals, copper and zinc and aluminium, for example, and that will be sold directly to manufacturers. And the whole point of this is to go towards trying to put a lid on producer prices. They're at their highest since 2008. We know that manufacturers in China have been screaming out about soaring prices for months now, and there, shortages of everything from containers to key input commodities that they need. Now, the big fear is that these producer prices eventually flow through to consumer prices, and of course may even flow to overseas consumer prices. That transmission hasn't happened yet, but certainly the pressure is building. The manufacturers have been calling out for some kind of relief for some time, and this is now the kind of first major tangible step being taken by the government to put a lid on these commodity prices, and we'll have to see how effective that will prove to be.
All right, Bloomberg's Enda Curran in Hong Kong, thank you so much. I do want to take a quick check on some stocks moving in pre-market trading here in the U.S. Now, one of the biggest movers to the downside is Roblox, the video game maker. It's down about 7% in early hours. The big issue is month-on-month bookings falling in May by more than analysts expected. You also have Oracle that is slipping in pre-market trading. Speaking of missing expectations, the bar was really high. The company just seemed not to meet it, and the profit forecast also came up short. That stock down the better part of 5%. One mover to the upside, though, is Arrival, the EV maker. It seems that Reddit traders on Wall Street Bets are now turning to talk up EV companies like this one, and that stock is higher by about 11.5% before the bell, Francine.
Kailey, so much going on today. Now, coming up, we'll talk about all of that with Andrew Sheets, Morgan Stanley Chief Cross-Asset Strategist. And then a little bit later on Biden and Putin, Leslie Vinjamuri, Chatham House Head of U.S. and the Americas Program. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz in New York. Now, I wanted to today, in place of a chart, show you a terminal function on the Bloomberg. And for our radio listeners on London DAB Digital Radio, I will say, before you're done driving, get to a Bloomberg terminal, or after you're done driving, get to a Bloomberg terminal and type in DOTS GO for today's Fed meeting. It's a great way to watch, and of course the market is going to be looking for any change here as well. What this shows you is individual members' projections for rates going out to, well, 2023 and then longer term. And you can see that the median projection doesn't rise from where we are now to 2023. Of course, it goes up longer term because someday rates are going to rise. But the point is, this could change today if the Fed finally starts to think about a future where rates have to rise, or rates are going to rise in the next couple of years. Andrew Sheets, Chief Cross-Asset Strategist at Morgan Stanley, joins us now to talk about the Fed and possibly much more. I usually say much more, but today probably not much more, to be honest. Andrew, what do you expect? You know, Mohammed El-Arian wrote a great column saying the Fed has kind of backed itself into a corner here, and they need to move out quickly before they risk a vicious cycle of interest rate rises hurting the economic growth that we're seeing.
Well, we continue to think the Fed is going to respond more gradually, but this will be an important meeting. As you mentioned, that DOTS page we think will look different after this meeting, as we think enough dots in 2023 will move higher to move the median to 1-2-1 hike there. So we think we will see some changes. We think the Fed will also acknowledge a higher inflation outlook this year by raising their inflation forecasts. But in terms of their message, we think they're still going to approach the market quite gradually. We think they still believe that there's enough slack in the labor market that can be done without risking more serious inflationary pressures. And you know, our forecasts, while they're calling for higher inflation, do see that inflation as somewhat transitory. So a slightly hawkish message today from the Fed, we think, but still a very gradual pace of removing that accommodation.
Andrew, as the Fed debate, though, moves to bond tapering and liftoff, what exactly is priced in the market? So even if we do have a more hawkish Fed today, will it actually change anything?
Well, I think that's a fair point. The market is, certainly after the price action the last couple of weeks, been pushing back their expectations of the Fed. For us, we think this could play out in two ways. One, we think the yield curve in the U.S. could steepen some more as the 5-year point remains well anchored, because we think the Fed will ultimately be patient, and that ultimately can help the carry and roll down at that point. But that longer-term bond yields will rise because the Fed is looking to run a high-pressure economy. It is looking to keep policy accommodation a lot easier for longer than normal. And because we think it remains quite serious about average inflation targeting, which should mean easier policy today, but tighter policy tomorrow. And then we also think it could be mildly positive for the dollar. I think the dollar is an asset where most investors that we speak to are more cautious. That's certainly very understandable given a number of factors. But we actually think that given the strength of the U.S. economic recovery, some of the kind of the subtle shifts we expect at this meeting, that all could be more supportive for the dollar than it's a drawback.
Okay, so that's in bonds and FX, Andrew, and we all know what impact all of this liquidity being pumped into the system has had in the equity market. How sustainable are equities in and around record highs?
Well, we do think that we're in more of a range-bound consolidation here for equity markets. And in some ways, I see some similarities between the current market setup and kind of the first half of 2004. That was a period that was kind of in a transition point between monetary policy. The Fed obviously cut rates in the middle of 2003, it then hiked rates in the middle of 2004. That was a period where you were just coming off of a very strong rally. It was a period where growth and inflation were still moving higher, but actually markets kind of chopped sideways as those valuations needed to adjust to that changing economic picture. So we see more of a sideways chop. 4,250 is our target for the S&P 500 at the middle of next year. So we see kind of an extended range-bound move in the S&P. We do see better performance for European equities because we think they can benefit from a stronger global picture without similar inflationary fears.
Andrew, when you look at China's campaign to try and control some of these commodity prices, does it actually change your investment view on what happens to these prices?
Yeah, so I think commodities are a tricky one. We are currently neutral, which certainly isn't the most interesting view, but we do see commodities somewhat trapped between a quite robust economic recovery and then prices that have already run a very long ways, we think, kind of relative to that better fundamental story. And I think we often see with commodities a pattern where they're phenomenal early cycle assets, but as you transition into a more of a mid-cycle environment, some of their performance can moderate. They anticipate the better growth, they rally ahead of it. And so, actually going back to that 2004 analogy, we saw very strong performances from commodities, very strong performances from small caps. And then it moderated. Then you did have a pause as you saw that consolidation before those moves started again. So we see more of a range-bound market for commodities, and we see a better outlook for oil than we do for the metals.
Andrew, thanks so much. Andrew Sheets there, Chief Cross-Asset Strategist at Morgan Stanley. Now, a little bit later today, of course, stick with Bloomberg for our coverage of the Fed decision and news conference from Jay Powell. It starts fronted by Tom Keene at 1:30 p.m. in New York, 6:30 p.m. in London, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua in London and Matt Miller in Berlin. Now let's get the first word news. In Israel, warplanes have attacked sites belonging to the ruling Hamas movement in the Gaza Strip early today. That came after incendiary balloons launched from Gaza set fires in southern Israel. They're the first attacks ordered since Israel's new government took over power on Sunday, and they're the first since an 11-day conflict last month ended in a truce. Bloomberg has learned that the European Central Bank is expected to extend bank capital relief by 9 months. That would ensure lenders keep supplying credit to the economy. It highlights the euro area's stronger reliance on bank loans rather than capital markets as a source of corporate financing. And Citigroup is the latest bank to warn of a bigger than expected drop in trading revenue. CFO Mark Mason says the revenue from the business could drop by a percentage in the low 30s in the second quarter. Strength in Citi's equities trading business is likely to be offset by a weaker performance in fixed income. And of course, Matt, that echoes what we heard from JP Morgan already earlier this week.
Yeah, absolutely. We've heard a number of banks come out and say that the trading the trading atmosphere isn't as frenzied as it was a year ago, and we knew that this was going to happen. But now those chickens are coming home to roost. Is that the right phrase? The important thing, though, I think still is that Jamie Dimon said you're going to see M&A like maybe you've never seen before. So they're getting inputs from other businesses.
Yeah, we'll have plenty more on chickens roosting and banks. Coming up, we'll speak with Mike Bell, JP Morgan Asset Management Global Market Strategist. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. It's Fed, and actually a really big one today. All eyes on the Fed, and that will be market moving, Matt.
Yeah, I mean, there are a lot of other things going on. For example, President Biden is meeting with President Putin in Geneva, and that's very important. And yet I can't bring myself to focus on anything other than the Fed. It's become so exciting, not least because of the price movement we've seen in treasuries. You know, people are continuing to pile into treasuries, pushing rates or holding rates down for whatever reason in a spectacular one-way bet that the Fed is not going to get more hawkish.
Yeah, and immediately, of course, Wall Street will look at the dot plot, and then we'll see whether that means that we'll see more volatility in the markets. What are we seeing right now, Kailey?
Well, Francine, the Fed decision today could certainly be a market-moving event, but it isn't one yet. The market really just in a holding pattern until we get that decision at 2 p.m. Eastern time. Where that leaves us is going not a whole lot of anywhere on equity markets on either side of the Atlantic. The Stock 600 now actually fractionally in negative territory, down by less than 1 point, could be snapping an 8 consecutive day record high winning streak. So we'll see what happens there. In the U.S., futures are pointing to a lower open, but we're only down about less than 4 points on S&P E-minis. No real action in the Treasury market yet. That could change in a couple of hours once we do get that Fed decision. But right now, the 10-year Treasury yield steady around 1.49%. And it is a weaker dollar story this morning, and that includes against the Russian ruble. The Russian ruble stronger against the U.S. dollar by about 0.4% ahead of that Biden-Putin meeting. And of course, the other story we've been following today is China's crackdown on some of the commodities out there in the world, including the industrial metals. And that is weighing on some stocks tied to them in pre-market trading here in the U.S., one of them being Freeport-McMoRan, which is down about 1.5%. U.S. Steel is lower as well. And then, of course, we have to check on some of those meme stocks. AMC seems to be falling a little out of favor. It's lower by 1.5% in early hours. But to the upside, Arrival Group, the EV maker, shares popping 11% before the bell, Matt.
All right, now I have a morning must-read. That's a Tom Keene thing that I've borrowed for today. It is Mohamed El-Erian's op-ed on the Bloomberg. And, you know, Mohamed has been talking about the Fed's outcomes-based policy framework for a while now, warning that this may not be the right framework for the environment that we're in. He says the Fed will most likely today fall short of what is required and risk exacerbating the challenges it and the economy face in the longer term. And those challenges are inflation that is more than transitory. We've heard this from Andy Haldane. We've heard this from Peter Hooper at Deutsche Bank. This could force the Fed's hand into bigger, faster moves than the market expects in terms of raising rates eventually and bring upon us a full-blown recession. Joining us now is Mike Bell, Global Market Strategist at JP Morgan Asset Management. Mike, I chose this because you studied at Queen's College, where Mohamed is currently the president at Cambridge. He's also an advisor to Allianz. He writes for Bloomberg Opinion, etc. What do you think about this view that's really starting to crystallize in markets?
So it's not our core view, but we think it's certainly a risk, right? So our core view is that inflation is going to prove
relatively transitory. I think it'll still be above target in 2023, but somewhere in the 2 to 2.5% range for core PCE. If we're wrong and actually inflation is more sustained than that and higher than that, then I think you do have this risk that the Fed have to put rates up faster than the market currently expects, given that they're looking to essentially go later than would normally be the case under this average inflation targeting regime. So I think that is a risk. But I think when it comes to equity markets, the key question is, at what point does that actually cause a recession? Because historically, the market never really priced in a recession more than about a year before the recession happened. And if you look at debt service ratios for the household sector, they're very, very low at the moment. The household sector spent the last decade deleveraging. So I think that the next recession is still several years off, even if we do get to that point as a result of tighter monetary policy in sort of 3-4 years.
Well, but if the Fed does, I don't want to say come to its senses, but if the Fed does say we're going to start reducing exposure to a now more risky environment, I'll steal a John Farrow buzzword, is the risk to investors asymmetric right now? Are they set up so that any kind of hawkishness broadcast is going to all of a sudden cause rates to rip to the upside?
Well, so I guess the setup today, when you look at bond markets, is not that dissimilar to where we were going into the taper tantrum back in 2013 in terms of where inflation expectations are and real yields. So the risk, of course, is that on the announcement of a taper, we see real yields move sharply higher. My personal view is that real yields will move higher from here, but probably not as sharply as they did during the taper tantrum back in 2013. And I think the market's going to be able to digest it. If you look back to 2013, remember, developed market equities, yes, they came down by about 6% on the announcement of the taper, but then continued to move higher. And if you look at the long run charts, it probably looks like they were ignoring the taper and just moved higher. So, I mean, we've got our mid-year outlook coming out on Friday. We've titled it Still Up But Bumpier. And I think that's probably what we're looking at. We think that in 18 months' time, equities are going to be higher than they are now, that they can digest a move higher in real yields, but that it might cause a bit of a bump on the way.
How much of a positive outlook will we see for growth, Mike?
I think growth looks very, very strong, right? Ultimately, what's really exciting at the moment is you look at CapEx intention surveys. There had been, I think, understandably, concerns that business CapEx was going to be very weak as we came out of this recession. But actually, the CapEx surveys, both in Europe and the US, are absolutely booming, suggesting that not only have we got these pent-up savings driving a consumer-led recovery, we're also going to get the other key pillar of growth in the form of CapEx supporting the outlook as well. So we're very positive on growth.
Mike, of course, we're all focused on the Fed today, but we also had, for example, inflation data out of the UK, 2.1%. Is there a risk that not just the Fed, but other central banks are going to have to move toward normalization earlier than expected?
Yeah, I think the UK story is fascinating, actually, because in the US, we think that the slowdown in the pace of the labor market recovery is mainly because of the unemployment benefits that are going to expire. So we think it's temporary, and we're going to see a pickup in the speed of labor market gains in the US. Whereas in the UK, there's a bit more of a question mark as to whether some of the workers who were working in, for example, the hospitality sector and the construction sector may now have actually moved abroad and be either unwilling or unable to come back. And that could potentially lead to a somewhat more structural upward labor market shortage when you look at vacancies relative to labor, and therefore put a more sustained upward pressure on inflation in the UK than perhaps we're seeing elsewhere in the world. So I certainly think that the Bank of England is going to also be putting rates up. But again, I don't think that's going to be happening until at least 2023.
Mike, thanks so much. Mike Belder, Global Market Strategist for JP Morgan Asset Management. Now, coming up, Leslie Vinjamuri, Chatham House Head of U.S. and the Americas Program. We look at Geneva, where President Biden meets with President Putin. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Scott Minerd, Guggenheim Partners CIO, will be joining our Fed Decision Special. This is Bloomberg.
The United States is not looking to kick off a cycle of escalation and conflict with Russia.
It's not us who brought Russia-U.S. relations to the present conditions.
If Russia continues to interfere with our democracy, I'm prepared to take further actions to respond.
We don't have disagreements with the United States. They have the only disagreement. They want to withhold our development.
We want a stable, predictable relationship.
Why the American partners have done what they have until now is a mystery to us.
So I responded directly and proportionally to Russia's interference in our elections and the cyber attacks on our government and our business.
The United States and Russia have some corresponding interests.
But we can also cooperate when it's our mutual interest.
I do hope that our meeting will be constructive.
Now, in just a few hours, the closely watched meeting between Joe Biden and Russian President Vladimir Putin takes place, of course, in Geneva. Well, joining us now is Leslie Vinjamuri, head of the U.S. and the Americas program at Chatham House. She helps us get smarter on foreign policy. Leslie, thank you so much for joining us, as always. So, look, today we're not really expecting some kind of policy announcement between the two presidents. We know that they won't do a joint press conference like we saw with Trump and Putin back in 2018. So what is today about?
I think today is really very important, certainly for President Biden, to signal to Russia, to Putin, that he stands very strong, that the United States is committed to deterring Russia's threats, multiple threats across multiple dimensions. He's also, signaling to America's European partners that there is unity, that the United States is committed to standing strong on Russia, which of course is a #1 security priority for Europeans. And remember that for President Biden, for the United States of America, the big geopolitical concern is China. And the only way to get Europe behind America on the question of China is to certainly demonstrate that America is with Europe on the question of Russia. So I think all these things are interlinked. But we've heard the president say he's just aiming for stability and predictability. This is not a reset. But, Francine, if you think about it, asking for predictability from Russia is actually quite a big ask. So I think it's a very significant summit, and we shall a meeting, and we shall see how it goes.
Leslie, given the fact that President Biden comes out of the G7, where it seems that the U.S. had back with certainly with a strong relationship with the allies, the same in NATO, does it actually change President Putin's view? Does he kind of if not back down, certainly soften his stance on international relations?
Well, it's an interesting question because, of course, many leaders, and I think Putin is probably one, are on the defensive when they feel that there's a sort of united front against them. So inevitably, this will make him feel less confident, less secure. That doesn't mean that he will back down, and in fact, it might be quite the reverse. And remember that Putin's looking to, play this meeting to his favor on the domestic stage internally within Russia. Certainly looks good for him to be seen to be having this meeting. And he will have his own press conference. He will not have a press conference alongside Biden. He will send his own message to his people. So I think, this is a very tricky meeting. And as you know, President Biden has had a number of Republicans and others who have not wanted him to have this meeting because they think it gives away too much in the face of what's been, aggression, cyber attacks, increased aggression along eastern Ukraine, any number of things that are really very serious for democracy in the West. So it's a risky move, but I think if anybody can pull it off, it's certainly President Biden because he's been there, he knows this leader, he knows what he's doing.
Well, even as President Putin amasses 100,000 troops on the Ukrainian border, puts Alexei Navalny in prison, occasionally sends the KGB out to kill people on foreign soil, Germany is still determined to pipe billions of dollars straight to Moscow through Nord Stream 2. And the second biggest army in NATO is buying weapons defense systems from Vladimir Putin. I mean, how united is this front really, Leslie?
Well, it's, you raised the really big issues. And obviously the Nord Stream 2 question was one that was divisive within the United States. It was divisive, as we're hearing, even amongst Biden's team, some of whom wanted those sanctions to be in place. And Biden has taken a very pragmatic line, in part because the president wants to have these two tracks. On Nord Stream 2, he cares a great deal about America's relationship with Germany. I think that was driving it much more than a consideration of Russia's interests. But also he wants to keep that pathway open to cooperation. On the question of Turkey and Turkey's relationship with Russia, which is very threatening to NATO, we saw President Biden has met with Erdogan. He draws those lines in the sand. He's really, this entire week has been about shoring up the unity amongst the G7, amongst the transatlantic partners, but also really signaling to Russia and also to Turkey on questions of democracy, values, on partnering in ways that undermine the strength of those core multilateral institutions, that this is a different United States than they've seen in the last 4 years, and that America will hold their feet to the fire. And now we have to see, whether the United States and the Europeans are able to deliver on that, and also how these very tough leaders respond in the weeks ahead.
Leslie, we're getting reports now from Dmitry Peskov, who, of course, is President Putin's press secretary, that Putin will arrive on time to the Biden meeting, which in some ways is a departure from his usual behavior when meeting with foreign dignitaries and other world leaders. He sometimes keeps them waiting for hours. As Putin heads into this meeting, does he need the U.S. more than the U.S. needs Russia, or is it vice versa?
Well, first of all, to your point about arriving on time, I've been told, what we're told is that actually it's going to be staged very carefully so that Biden turns up second, which is, I think, the way that the American president would like it to be. And as you said, it's not normally how it happens. Both of these countries depend on each other for their security, in large part because the stakes are so high for Europe, because Russia has demonstrated its ability to be tremendously disruptive, not only on questions of sovereignty and territorial borders with respect to Crimea and Ukraine, but also when it comes to interfering in the internal affairs of European democracies and especially in America's democracy. So need might not be the right word, but certainly they have demonstrated their ability to be mutually threatening, and Russia is a disruptor. And frankly, it's for the United States, it distracts from its ability to really focus on what it would like to focus on, which is China. And there is a concern, of course, to hold Russia just close enough that China isn't able to court it even more, and that relationship between Russia and China doesn't become more disruptive than it has the potential already to be.
Yeah, Leslie, you're right to bring up China. How does the Biden administration's foreign policy, when it is specific to Russia, actually read through to its foreign policy elsewhere?
Well, everybody's watching to see, I think, in part, whether the United States can effectively reorient its foreign policy focus. This has been a conversation and a concern throughout the Obama administration. Donald Trump also tried to really focus as much as the president was able to provide clarity on China. And from the Middle East to Russia, it's been difficult for the United States to do this. Now, the calculation that Biden's making is that the way you get there is by ensuring that you work multilaterally with your closest partners on security issues, on economic issues, on the general question of deterrence, because that gives you the flexibility and the bandwidth to reorient. So the rest of the world is watching. They're looking to see if this bet can be realized. And clearly China's watching, and China's especially watching the statements that have come out of Europe and the G7, because so many of them are anti-China in their eyes.
Leslie, we know that President Putin and President, of course, Biden have known each other for a number of years, have met, but not since President Biden has become president. How much animosity is there between the two men?
Well, I think that certainly from the point of view of President Biden, who was part of an administration that entered office, President Obama, wanting to reset this relationship, and it failed in that aspiration, in no small part because of the annexation of Crimea and the incursion on eastern Ukraine. And so I think there's a deep degree of distrust. And I think that, President Biden isn't one to overly indulge in personal sentiment. He's a pragmatist. This is why he made the decision that he did on the Nord Stream 2 question of sanctions. It's why he's made the decision to meet with Putin. So yes, there's animosity, but I think this is kind of a backseat rearguard question for the president. In terms of Putin, clearly Putin has no great interest in the United States, no great fondness for America. But what's really interesting, Francine, is the Russian people's attitudes. If we believe the poll that was just released, the Russian people used to be somewhat favorable, quite favorable towards America under Donald Trump. And I think Donald Trump had this thing for Russia. But that's changed rather remarkably in the last year.
Leslie, thank you so much. Leslie Vinjamuri, their head of the U.S. and the Americas program at Chatham House. Now, later today, we'll, of course, continue the conversation with former U.S. Ambassador to Russia, Alexander Verbshov. That's at 11 a.m. in New York, 4 p.m. in London. And then we expect the two leaders to meet shortly in about 2 hours. And then the conversations and the talks could last anywhere between 4 and 5 hours. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now we're joined by Tom Keene, a great student of the Fed and the dot plots, co-anchor also of Bloomberg Surveillance. Tom, you must be so excited about the Fed. I know I am. And then we're also looking at Biden and Putin in Geneva.
No, we've got a lot of different stories today. Certainly front and center right now is the visit in Geneva of the two world leaders. The world leader from Goldman Sachs will join us later. Jan will be with us in the early morning hours here. Thrilled that he'll attend 731 Lexington as we escape the pandemic here. Hatsius with us with many other good people this morning. And then on to the festivities in Geneva, Francine. You and I were in Helsinki, and this is a decidedly different tone.
Yeah, it is. And I had the time to remember, first of all, everyone was on time. They also did a joint press conference, which we're not expecting today. But I like the fact, Tom, that you're looking at ruble. Tom Keene, co-anchor of Bloomberg Surveillance, shortly with, and then with the Fed special a little bit later on. That special coverage of Jay Powell starts at 1:30 p.m. in New York, 6:30 p.m. in London. So much to watch, Kailey, and you're also all over the Fed.
All over that Fed decision at 2 p.m. Eastern time, Francine. Watching the dot plot, of course, but also any talking about tapering is what the market will be paying attention to, Matt.
Hey, I'm watching an AFP report says the EU has lifted or is lifting travel restrictions for U.S. residents, vaccinated and non-vaccinated. I can't wait to see the details of this so that some of my friends can come visit me.
Yeah, or do you go and visit them? So much going on. We'll look at that. And of course, I'm looking at Biden, Putin over in Geneva. Coming up in the next hour, Eric Friedman, U.S. Bank Asset Management Chief Investment Officer. This is Bloomberg.